Hello and welcome back to Only Divergences. In this video, I will be updating my ongoing coverage of AMC. My last video was called, Is That It? Meaning, was that last pop, was that the last bullish move? Referring to that nice day we had a couple weeks ago when we had this, this nice little pop here, as you can see. The thumbnail on this one is the party over? And that is really asking if this AMC saga and really the larger meme stock saga is over, right? Both in terms of technicals, but also sentiment. In my previous video, I outlined that we probably will only get consolidation with some downside bias. And that's really exactly what happened here. The day after, we did open a little higher, but then we came down. We've just been consolidating lower. If you are new and this is the type of pure, clean technical analysis you are looking for, then subscribe right now. I'm not just providing commentary, I'm actively testing a hypothesis around technical analysis, so come join me. Today is Sunday, October 10th, 2021, and we are taking a look at AMC. There's really not much to say about AMC. The stock had a nice move higher on very clean bullish divergence. We can see it here. We had a low here in price and then a lower low in terms of price, but within that context we had a low in momentum, you can see here, and a higher low in momentum. This is very clean, so it's natural to expect this type of a move, a bullish divergence, and that's exactly what we got. But we can see that since that point it's stalled out, it's consolidated, and it's just been kind of creeping lower. Now the only thing that I want to go over is why this stock did this after such a large spike, right? Now recall from last video, I'll put a link in the description, the reason I said this would happen was because there was no technical support for a further continued move higher, meaning that there was no potential on the weekly or the daily, no clear objective setup for it to move higher. So let's look at the weekly here, and we can see that the move higher was within the context of a lower high, a subsequent lower high on the weekly. This is a very bearish pattern. There is nothing technical about this pattern that suggests that there is a high probability of the stock moving materially higher. That is most clear on the MACD, which, we do have negative histogram here, okay? But it's not divergent, and really the momentum looks to be rolling over here, right? You can see after this nice explosion earlier in the year, we've kind of stalled out, and obviously we've had bounces, but overall, the momentum does look to be moving lower. Now, there's obviously potential for anything. Like you can see here, we had a similar sort of consolidation pattern moved higher. But right now, I just don't see that at this time. Recall on the daily that we noted that we still had negative histogram on the daily here. You can see here this red histogram here, and that there was some potential. You could argue that we could have a higher low here. You can see we had a low here, and then we have a higher low here. But without the pattern clear on the lower levels, you just have to err on the side of caution, and that is true especially when you have a big sharp spike move like we had here, right? You have to ask yourself about the meat that's left on this bone and what type of a follow through you could get within the context of a daily pattern, which isn't the most bullish. So then we do have on the weekly and daily pattern a lack of longer term support for a move higher. But within that context, we see that the hourly had a nice bullish setup. Now this means that the stock can and indeed must go higher within this context from this point, but it was really only a relief rally. And that is as far as it will go, especially within this context. So the call that I made in the last video that we will likely see only consolidation was correct, but I must emphasize it is the reason why it is correct that is important. And that is to say that within certain broad weekly and daily contexts, without larger constructive patterns, you have to always outline the reasonable expectations for how much of a move you can get from a certain setup. And now while the strategy itself will not directly make you money, it is good practice for a technical analyst, but also good practice to protect yourself from chasing after rallies, especially if you are doing so with sensitive options. If you're watching this video for the first time and you go back and you watch my video that I released at the close here, go back and watch and see if you had been subscribed, whether you would have been able to save yourself some money, had you gone long thinking that this would move higher. Investing is as much about what you don't do as it is what you do. And again, with AMC, I have to emphasize that the easy money has already been made. So right now the question is, what next? Well, on the weekly context, time frame, still does not remain favorable to the bulls. We are still in a second lower high, and I'm not sure that it's over. Now we can compare this move to this move and see that, even in this move we had a lower high, right? And there was consolidation for weeks and then it broke out. So if you are bullish, you can make that argument, but in a best case scenario, you would actually want to wait until the setup is a bit better before it moves higher. So really you're still adopting a lot of risk here if you're either going long or staying long relative to the potential reward. And again, just because it happened here does not mean that it must happen here again. On the daily, you might be able to argue that we're forming a little bit of a base here, right? But when you look at this from the perspective of someone who is looking only for optimal entry, for going long with the least amount of relative risk versus reward, the RRR, you cannot look at this right now and say we are there. Similar to when we were at this point, actually, when we had come down the first move. See, we've come down the first move and we've had bounces. We actually had a pretty big bounce here, which could be similar to this one. We do run the risk, similar to how we moved lower here, to continue to move lower here. But the greater risk is that such a move will compromise confidence in market participants even further, given that we are coming off of a second lower high, which could unfortunately result in prices slowly further deteriorating and then possibly even undercutting this previous $30 level, the support here. I know if you're a bull, this is not what you want to hear, but remember, investing is a casino, and if you are not playing like the house, you are getting played. So again, the easiest way to make technical analysis simple is to say that you are only looking for bullish patterns and that you are only looking for optimal setups. And if you find them, you have to outline targets beforehand. If you restrict yourself to that narrow potential, then it becomes a lot easier. Of course, it means that you're not trading every day, but this is a long-term endeavor, and above all, it is one of confidence and patience. So that's my overall opinion of AMC. The easy money's already been made, at least on the long side. Thanks for watching. I hope you found this informative. I'll likely wait 2 weeks to update this unless something very interesting pops up. My gut tells me that we will slowly bleed lower on this stock over the next 2 weeks, possibly undercut the previous lows around 30 and then maybe even go lower. Right now, it looks like a lot of the meme stocks have completely, or at least partially, retraced their big moves. We have to be open to all possibilities, and I would be remiss and upset as an analyst myself to not bring these things to your attention. And so that is why the thumbnail asks if the party is over, because I think it very well may be. As of now, this is not a high priority for me. I will see you in the other videos I'm putting out today or after the close on Monday. Take care.